SPY is finally starting to slow down a bit after the aggressive push into 749.50 resistance area and fresh all-time highs.
Welcome to the Couples Trading Lab. This is the daily price action show.
Sellers controlled most of the open after the gap down, but buyers stepped back in mid-session and helped print a doji-style reaction candle, showing dip buyers are still active for now. The main area I'm watching is 735.30 to 738. If buyers continue defending that zone and SPY reclaims 743.40 with strong momentum, I think we can see continuation towards 748.50 gap fill and potentially new highs above 750. At the same time, traders should stay careful chasing after such an extended move. Selling volume started increasing on Friday and again today, which can sometimes signal momentum beginning to cool off after a strong rally. For downside risk, 731 is the key level. If SPY starts breaking and holding below that area, I'd watch for a deeper pullback towards 725.30 near the daily 20 SMA, with 716 becoming the larger liquidity zone underneath. Right now, this still looks more like a pullback inside a bullish trend rather than a confirmed reversal. The reaction around 735 to 731 will likely determine the next major move.
I agree with your analysis, Ray. And for me, one level that I'm watching on SPY is the 20 EMA line. The 20 EMA line on the daily time frame is currently trading at 725.36, and there's a gap at 723.89, and I feel like until price finally pulls back to that level, we're not really going to go anywhere. We won't have the liquidity to make new all-time highs. I feel like we may push up in the upcoming days after Trump's headline of pausing the assaults on Iran. It is possible that we may try and approach or attempt new highs, but very likely we are going to reject back down and collect liquidity down at this white 20 EMA line. I just feel like given how overbought we are, how overextended we have been, and the fact that we are now at a much larger resistance area, testing that resistance line of the rising wedge, I think it's more probable market is going to pull back towards the 20 EMA, test that level around 725, and test the buyer strength there, how demand is going to be after that reaction. Now, if that level does not hold, then it will be clear as day that the market will not go anywhere until we come back down to this area at 712 to 707. We test the prior breakout level, which is known as a smart money demand zone, where you come back down, you test that prior level, the cluster of those candles there forming this smart money demand zone. Buyers have a much higher chance of getting back in with renewed demand, with new volume coming in, with newer buyers coming in, and then going for another move higher and perhaps forming some sort of bull flag from 707 to 750 area. That to me is a good potential. However, first I'm going to focus on this particular line, the 20 EMA line at 725. I feel like any move up here will very likely be unsustainable, and until then we are going to continue to sell off and head back down towards 725, test that level, test real demand, and then if anything either move higher or think about if we need more liquidity around 707 to 710 level. Now that is our SPY analysis. QQQ also, as we can see, very overbought. We saw two large volume days in a row that has far overshadowed the prior volume days, the prior rallies. So ever since March, we had massive volume that slowly died down, and over the last 2 days, we had two massive red sessions. Both of them were backed by heavy sell volume, and there's a good potential looking at all of these AI stocks that we are going to see more downside on QQQ. Any upside that we get from here will likely be unsustainable until we come back down, test that 683 area where the 20 EMA line is sitting. Now there are some gaps down there. We have a gap at 673, which can be a higher probability, but most importantly I'm going to focus on 685 685 as my first target. And if 685 does not hold and there's not strong demand, there's not renewed demand after the pullback, then I would look at the much larger level of 661. However, let's first focus on 685, and as long as the trend remains strong at that equilibrium area, I'm going to continue to remain bullish, expecting the market to continue to move higher. Given the overbought conditions and the overextension from the 20 EMA line, there's a great chance that we are going to come down, test the 685 before we make new historic all-time high. Let's go over some of the tech stocks real quick. NVIDIA reports earnings on Wednesday. That's going to be major for the market. I am a little bit concerned for NVIDIA. As we can see from the last 3 earnings, we have mostly sold off. From August 2025, we saw a sell-off, and then again, mid-November, we saw another sell-off from NVIDIA. However, if NVIDIA does come back down and test its 20 EMA line at 211, there's a great chance that I would say the stock will likely get some nice upside post-earnings, given that they always beat top to bottom lines. Now, another stock that we have been watching is Microsoft. The stock has been very strong. This is actually Ray's favorite stock of the week. This stock is forming this bullish flaggish formation here. The TTM squeeze has reset, and as we can see, bulls are holding very well above the 20 EMA line. I think there's a great chance that we are going to fill that gap at 432 and very likely head towards the 20 EMA line, which would be the measured move on this potential bull flag breakout. That is our favorite stock of the day and week, and hopefully you guys enjoyed this short analysis video. For tomorrow's session, we are going to include AI momentum stocks, so if that is something that you're looking for, we look forward to seeing you tomorrow. If you guys enjoyed the breakdown, make sure to subscribe to Couples Trading Lab for daily price action analysis, educational uploads every Saturday, and our weekly watch list every Sunday.
And let us know down below, do you think SPY continues grinding higher from here? Or are you waiting for a larger pullback before becoming aggressive?
Leave a comment down below. We really enjoy reading your comments. And not only us, but others also enjoy reading your comments to feel what sentiment is like in the market, what everyone is thinking. And most importantly, it helps push us towards other viewers as well, recommends us to other viewers, and that greatly helps our channel. Thank you so much for watching this video. We'll see you in tomorrow's daily price action show.